She's shaking her head. Okay, so today is, you guys are lucky. You have me all to yourself. So you can feel free at any point to stop me, ask a question, or type a question into the chat box, and we'll go through this. It doesn't look like there's enough material here. This is the new Ignite for 2 hours, so we're probably not going to take 2 hours, but we'll go through it, and I will answer any questions, any and all questions. So, okay, Eileen, let's start this PowerPoint. Okay, so have you taken all the other sessions of Ignite?
Yes.
All of them, yes, all of them except for one.
Okay, great, great. So you have seen this slide then before, what successful agents do every day. Are you doing it? You are. Sherry is saying yes. How about you, Jean?
Not 100%, but I am focusing more on the real estate. Like I said before, like after Bold, I started taking real estate more serious. So now I'm trying to start, to do the lead generation, do all that good stuff.
Yes, yes. And do you both have your databases set up in Command?
Yes, that I have, yes.
Okay, perfect. How many, Sherry, how many do you have in your database?
So I've been adding contacts in. So I didn't know how to like import it, like that I kind of struggled with. So I kind of really like started off new, and I just started last Monday with it. So I like started incorporating like my family, my friends, all my sphere, plus like my new buyers and stuff. So I kind of did it as like a clean slate, if that makes sense.
Mm-hmm. Okay. How many do you have in now as of today?
I only have 50. Oh, I'm sorry.
No, it's okay. Keep going, Jean, sorry.
No, it's your spotlight. I'll take your spotlight. I'm sorry about that.
Yeah, so Sherry, how many do you have in as of today?
I believe 40.
40? Okay.
40.
All right. So your goal is to get that to 200 as quickly as possible.
Okay.
And now when you're setting them up, what are you saying, Eileen?
If you have your contacts,
you're a frog. Okay, it's your internet. Type in the chat, whatever you'd like to say. So yeah, get to 200 as quickly as possible. And are you setting them up on neighborhood nurtures based on their addresses? Okay, I would immediately set them up on that for a monthly neighborhood nurture based on their zip code. So they will start to get the information from you. And, if they know you as a teacher, they're going to now start to say, oh, wow, this is Sherry and she, is, and you may want to start that off with an email from you that goes out to the database. You may want to set it up as a smart plan that once you enter it into your contact database, that they get an email from you. Like, I just want to let you know, I've started in real estate. I hope that, over time you will see me as your local expert. And I have you on my list to send you information specific to your neighborhood about what's going on in real estate there every month. Because I want to make sure that my friends and my family and those that I know stay up to date on their real estate investment, which is really what their home is their real estate investment. So, and if you need more specific language on that, feel free, or if you type something up, send it over to me. I'm happy to look base.
Great.
Oh, okay. So Eileen had it. Jean, are you coming on? Nope. Okay, and I see Katerina has joined us. Katerina, can you turn your camera on so I could see you?
Rosemarie, I don't have camera on because I cover it. I'm working now. Doesn't mean sometimes it's happened that I have to go out.
Oh,
but I
okay.
can listen to you, okay?
Okay, sure.
Thank you.
So the reason that I'm talking so much about the database before we even get started is because the one thing that if you haven't heard it a million times already, you should know is your database is your business. And how you interact with your database and how many people you have in your database is what's going to determine your success long term in the business. So you want to make sure that you do keep adding to it every day, and you keep it healthy and you keep it going. So it's really, really important. So you know what successful agents do every day to grow and run the business. Okay, I mean, you can click over to the next one. And the last one on there you'll see is manage money. I have to get with my slides. I'm sorry.
No, it's fine.
So when you were taking your classes to become an agent, did they talk at all about running your business? Probably not. Most of the time they don't talk about that. And it's a real downfall, and I've seen, you know, many agents go down in this business because they don't know how to manage their money and run it as a business. So that's really the big difference between us here at Keller Williams and a lot of other companies, is that we really want you to understand that you are an entrepreneur and that you're running your own business and you're running it underneath our umbrella of Keller Williams. But there's a lot that you need to do to learn it, and we're here to support you, to teach you what you need to do. Okay, you can go on to the next one, Eileen. So today we're going to talk about, next one after this. Oh. Okay, today we're going to talk about the habits for a financially sound business. And one of the things that I said most agents do is they don't treat it as a business. Some of the common misconceptions that agents have is that they confuse what they see as income with profit. And so the easiest way that I can tell you the differential in that is that most agents consider whatever they take home after they split with their broker, that's what they make in real estate. Okay, that's not what you make in real estate. That's like going into a store and looking at a shirt that's $100 and saying to the store owner, how much profit do you make on the shirt? And the owner turns to you and says, well, I pay $50 for it, so I make $50 in profit. Well, we all know that that's not true, right? Because the store owner has overhead. They have people working for them. They have taxes that they have to pay. So I want to make sure that you never talk about what you make in real estate as the split you have with your broker. Because there's a lot after that that comes to it. The other big downfall that I see is that agents don't pay their taxes. Okay, because that's again, when you're going to split with the broker, you're going to get money, but that money, you're also, in addition to operating expenses and the cost of doing business, you're going to have to pay your taxes out of that. And so every salesperson is required to file a quarterly estimated tax payment because you are a 1099 independent contractor with the broker. So based on that income, you have to file your estimated taxes. And to know how much you should be filing, as a general rule of thumb, you need to find out from your accountant what tax bracket you're in, and you need to take that much. So if your accountant says you're in a 30% tax bracket, when you get paid from Keller Williams, you need to take 30% of that and put it aside right off the top for taxes. Okay, before you pay any of your other operating expenses. A lot of agents don't understand financials. They don't want to. Their personality type is to go out and start selling. And you want to make sure that you understand the fundamentals, and that's what this is about, really understanding the fundamentals and not just winging it. You also should, out of your business, pay yourself a salary. So is anyone here already formed an LLC for their business? Okay. So if you're going to go out and start really any other business, the first thing you do is you form a company, right? It provides you some insulation, some from liability. It's a way of doing business. It's a way of keeping everything in your business as a separate business. So I highly recommend that you form an LLC. Now, the one thing in New York State is that the only person that can own that LLC is you, the licensee, in order for us as the broker to pay that LLC. And you have to give us a letter, a copy of the certificate of incorporation, along with a letter stating that you're the only owner of that LLC, so that we can pay you into that. And then you'll want to have, a separate bank account, a separate checking account for your business and your business expenses. And what you're going to do at the end of each month is you're going to pay yourself a salary out of that business. So you're running it the right way. Okay, so the habits for a financially sound business is to set up a profit goal, and we'll talk about that today. And that funds your big life, right? Because Gary Keller says, we work to provide the things that we want for in life, the things that you want for your family, and that's really going to be your motivation and your driver. Estimate, save for, and pay your taxes on time. Use the proven models and the system of the MREA chart of accounts. So who here has a business plan already? Anybody? Nobody? Okay. So that's one of the first things I'm going to ask you to go back to your coach about if you don't have a business plan, and ask your coach to help you to design a business plan, because the business plan is going to, and you also need to, in your MREA book, Millionaire Real Estate Agent book, you need to look on page 122. 122. Yeah. Starting actually on page 119. It is going to be talk to you about the business plan, and it's going to go over the 4 models of the business plan. Okay, it looks like this. The first being the economic model. The economic model starts with what your profit goal is, okay, the amount that you want to make. And it helps you to do the calculations to calculate how you need to get there. How many appointments you need to have, how many listings you need to have, how many buyer sales you need to have in a year. Because if we don't have a goal, we don't know where we're going, right? If when you say, I want to go to New York City, do you just get in the car and start driving? Or do you have a point that you want to go to, and you use a map and a GPS to get there? So you want to look at your business plan, really will become your map. Okay, and then we'll talk about other tools that we have, like the GPS. We actually have something called a GPS, or a 135, and a 411 to help you to get there. Okay, and though that will be your GPS. So within the business plan, you have the economic model, and then that will go into the lead generation model. How many leads do you actually have to generate in order to hit your goals? Additionally, you'll want to look at your economic model, which is your budget. And that's item number 3 here, which is use the MREA chart of accounts. So when you read in the Millionaire Real Estate Agent, the section about the business plan, you will see in there that they have a chart of accounts, and that's for a profit and loss statement, which you'll want to generate every month. And it will show you line by line where your expenses of the business are going. Okay, and we can help you with that. I generally recommend QuickBooks to put your business on QuickBooks right from the start. If you don't know how to do it, it's pretty easy, because if you do it online, the online version, it's a little bit more expensive, but you can have an accountant or a bookkeeper that's hooked into that as well. You can hook up your bank account, your credit card. It will all filter right into there, and then it will tie into your chart of accounts. So it makes it a lot easier, you know, because again, agents want to be out selling. They don't want to be bookkeepers in their business. So we want to try to get as much leverage into the system as possible. And here on number 4, be fiscally savvy by reviewing your financials monthly. That's what I was talking about. So your financials are your balance sheet and your profit and loss statement. Pay yourself a salary. We talked about that. And prepare now for a financially secure future. That's the most important thing. I've actually seen agents go out of this business because they got into such a deep tax liability that they could no longer afford to be in business. And they had to go out and get a job, and they could no longer have a career that really would provide them with unlimited potential income. Okay, Eileen, let's go to the next one. Money is good for the good it could do. You know, I'm going to ask, what do you all believe the purpose of business is for you?
To make money, to generate money.
To generate money. And what does that money do for you in your life, Gene?
Well, it depends. Everybody's financial situation is different. You know, to me, it could be, okay, I made this amount of money. Now I could, you know, double my business or get my business to be bigger or greater. To other people, hey, I made more money. You know, I could now buy a house. I could go on a family vacation, stuff like that.
Mm-hmm. Yeah. So it's really the good it can do in your life, you know. And again, Gary says, you know, the money that you make in real estate is there to fund the perfect life. Because to just work to just get money, it's really not a big motivator for a lot of people. It's really, what could it do in their life? What could it do for their family? Can it help them buy a house? Can it help them put a child through college? Can it help them go on vacations? So you want to make sure that you understand how much money you're going to need when you make your profit goal for the year to fund that perfect life. And make that your big goal. Okay, Eileen. So here we have 2 scenarios, and this is the financially sound or unsound. So it starts with you selling a home, and let's say the sold commission is $9,000. There's going to be the split with the market center and your franchise royalty, and an agent would conceivably take home $57.60. A lot of agents go and what do they do with that? They put it in their personal bank account. Wrong. Totally wrong. And then from the bank account, it goes into their wallet, and they use it to pay their expenses of their life. Okay. Really, that's not running a business. Okay. And it's really very fiscally unsound. So you want to look at the scenario on the right side, which is sort of visually puts what we've been talking about. You get a commission, you get your payment from Keller Williams, you have a business bank account, which is for your LLC, and it goes from the business bank account, a portion of it goes into your personal bank account, of which you have a tax savings account. I highly recommend a separate tax savings account so that the money is not commingled with your everyday operating funds or your personal funds. because suddenly we find that's when we get into trouble. We find that that money disappears. And once you pay the expenses of your business, then you pay yourself and it goes into your wallet. Okay, Eileen. Okay, we talked about that. We can move through this. Okay, the MREA models. So as we talked about the business plan, to construct a business plan, this is the first part of it. And that this is the MREA Economic Model. And that starts on page 129 in the MREA book. So your business is going to run looking at your income, which is your gross commission income. So again, gross commission income is not the income that comes to you, the agent. That is the actual total gross commission in the deal. So if you sell a house for $500,000 and it's a 4% commission, that $20,000 that you're writing the commission bill for is the GCI. And if you have a program like QuickBooks, that is what you should put in for the top line GCI number in your business. Even though you don't actually see that number come into your business, it is still the amount that you have produced out of it. Then we have two different types of expenses in our business. The first is cost of sales. So cost of sales is represented by the company dollar that you pay to Keller Williams, the 30%. Okay. A cost of sales would also be the 10% you're paying to a productivity coach or any coaches. And the franchise fee, the 6% to Keller Williams Realty International. So all of that can total up to 30% of the gross commission. And then your operating expenses will be another 30%. And that will leave you with a net profit goal of 40%. So again, out of the net profit, you do still have to pay your taxes. So this is before tax profit. Does anybody have any questions on the economic model? And of course, the key in the real estate business is to lead with revenue. So when we're going to get into the budget model, and I don't actually know how much of it we really get into in this class, but you're going to want to make sure that your expenses are clearly monitored, looking within the 30%, and that you're generating enough revenue to pay the expenses, because we should always be leading with revenue. Okay, I mean, the flow of money. So as we've talked about, we have the income, what comes into your business, the expenses is what goes out, and the profit is what's left. So remember, you're never making what the commission is that you see from your broker. That's not what you've earned in real estate. What you've earned is your net profit after you take out your expenses. And again, not a lot of companies teach this. So a lot of agents are under the misconception that they're taking home whatever they get after their broker and whatever is on their 1099. And that's absolutely not what it is. It's after you pay your expenses. And everyone has expenses in every company, right? We all have automobiles that we need to use for work. We all have supplies that we need to get. So remember also, I mean, that's the great part, and one of the beauties of running your own business is that many, many things become deductible, okay? You should talk to your accountant if you're working at home. Some accountants will say you can take a percentage of your mortgage or a percentage of your electric bill, things like that, you can write off against your business. Becomes a huge tax advantage for you to have a business. And certainly, you can write off supplies, and if you have 2 autos in your family, you can usually write off fully one of them. Certainly if it's a lease, you can. But even if it's not a lease, you may be able to. But again, talk to your accountant specifically about that and what advantages you can use. So the way that we work in Keller Williams is we do tell you as part of your business plan, profit, what's your goal? And then we look at and make sure that the expenses fit into that 30%, actually the 60% threshold, because you are going to have cost of sales and operating expenses, and that you're going to then have your income goal. And your income goal is going to really relate to how many houses you have to sell to hit that goal. Any questions about the flow of money? I know we went over that pretty quickly. It might be a new concept, the whole idea of what your income actually looks like in the real estate business.
About credit card usage of your business credit card.
Hear you. I know I'm sorry, you'll have to type in the chat box. You're really very broken up today. Okay, so the type of income that you're going to see in the real estate business is income from closed transactions. Oh, Sherry has a question in the chat box. Okay, let me pull up.
You kind of answered already. I was wondering if you would suggest every agent to get a business credit card, and what it seems like through your presentation. I feel like that's a smart plan.
Yeah, absolutely. And because, if you're using QuickBooks Online, you can attach that card straight into, for the information to go straight into there. Like that's what I do in my agent business. I have a separate credit card and everything funnels into there. And the person Mike, who's doing my books, he automatically, number one, if he's asked me one time and it's a recurring charge, it will automatically post it to the chart of accounts. So he doesn't even have to ask me, but every month it'll just post up, and there's very little to do. So yes, I definitely recommend a separate business card.
How much is QuickBooks, that program?
I want to say it's about $250 a year.
Okay.
Yeah. So.
Thank you.
Yes. I think that's another fallacy that's out there, is that we probably don't educate agents enough when they're coming into the business with the investment that they have to make, and that this is not a business that you come into and there's no upfront investment, right? There is an upfront investment. You have to pay your board dues, you have to get signs, you have to, get the things that you need to operate your business. And you also should have some reserves. Generally we recommend a 3-month reserve in your business at all times. So even once you get going and you start making money, when you're taking the money out of the business, you should leave some into it. And that's for 2 reasons. Number one is hard times. And number 2 is you need to have that money there as the seed money to grow your business. Because in order to grow our businesses, we always have to invest in them. And so you need to keep a reserve for that. So the income from your real estate business is listing income, sales income, buyer side income, referral income, and leasing income. Okay, Eileen, we can go to the next one. So the cost of sales, we talked a little bit about this already. This is the company dollar, the commissions that Keller Williams Hudson Valley takes, 30%. The royalty fees, the 6%, which caps at $3,000. And the commissions you pay to employees or independent contractors involved in sales. So that would be if you had an assistant and you paid them a bonus based on the transaction, it should go in cost of sales. The admin's salary would go as an operating expense, but the bonuses would go as a cost of sales. And then of course, any referral fees. So if someone refers your business, an expense would be a referral fee. Okay, Eileen. And everybody knows what our market center cap is right now, right? You know what number you are at when to get to 100%. Okay. So here is how you figure out what your net commission is, okay, that comes into your business. And this would actually be the number that would show up on your 1099. So that would be the GCI less the company dollar, which is the GCI times 0.30%, 30%, 0.30, minus the royalty, which is the GCI times 6%, and that equals your net commission. Okay, so let's do a little exercise here. So for the first one, if the commission was $10,000, what would your net commission be? If the GCI is 10,000. Does anybody have that number?
Would it be 3,000?
How much?
3?
I'm sorry, I couldn't hear you, Jean.
3,000? Can you hear me?
Right, so the company dollar would be 3,000, but your net commission would not be 3,000. 3,000 is the amount that you would pay the Keller Williams. I'm just doing it on my calculator real quick. Okay, so let's do it together. So in the first box, you're going to write your 10,000, your GCI.
It will be 7.
Okay, 6,400. Katarina got it. I see her, and we'll go through it now. Thanks, Katarina. So the first box, you're going to write 10,000 in. Then the next box, you're going to take that GCI, which was the 10,000 times 0.30, okay, which gives you 3,000. So in that box, you're going to write 3,000. Okay, then you're going to subtract out the royalty. So that's the GCI times 6%, which is $600. So in the third box, you're going to write $600. And then you're now going to take the 10,000 minus 3,000 minus 600, and that's going to bring you to your 6,400 net. Everybody good with that?
Yeah.
Okay. So now the first thing that you'll cap on in our system will be the royalty, which will be the amount that you pay Keller Williams. So what is your net commission if you have not yet capped on company dollar? What will be the net commission check you receive after cost of sales? And I have to tell you that the formula they have here is wrong. So if you've capped on your royalty, but not on the company dollar, okay, you're going to take the GCI, which is 10,000, and you're going to cross out that royalty, okay? You're going to put in instead the company dollar. So it's GCI minus company dollar. So, and I have to tell you, I'm sorry, this is the first time we're using these slides. This is a new Ignite and a brand new version that's tied into Command. And so I didn't really study the slides so much, but this formula is wrong. So it's GCI minus company dollars. So it's going to be 10,000 minus 3,000, which is your company dollar. And so that means you would net 7,000. Okay. And now, if you've capped on both, what is your net commission check? So that would be your 10,000. And in our market center, we do charge a $100 transaction fee. So really, it would be 9,900. Okay, is everybody good with that? Okay, Eileen, let's talk about building your future. Okay, so we're gonna do a little profit goal here. So this actually takes you through, and you can, again, if you don't, especially if you don't have a business plan, what you're going to want to do is start with your net profit. Again, this would be the amount that you would want to net out of your business that would fund your perfect life. Okay, so you know, if that amount is 50,000, if that amount is 100,000, if that amount is $1 million, whatever you want to take out before you pay taxes, put that number on line number 1. And I have to apologize. For some reason, today at my house is the day that we're having power washing done. So I'm trying to speak above the power washer, but hopefully it's not too distracting. Okay, so now you're going to take whatever your net profit is and you're going to divide it by 0.60. Okay, and that's going to come to your gross profit. Now you're going to divide your gross profit by 40%. So divided by 0.40. And that is going to be the top line GCI that you need to generate out of your business, okay, in order to meet your net profit goal. So does everybody understand that? Are there any questions around that? Did everybody come up with a number? Does anybody want to share their numbers? No shares? Okay, so as an example, if you wanted your net profit goal to be $100,000, okay, to come out of your business, your gross commission, your GCI goal, your gross commission income goal would be 416,666. So hopefully, if that's what it was, you can get to there. Now what you're going to do is you're going to take that gross commission income and you're going to divide it by the average commission. So in our market, the average commission is about $10,000. You could use 9 or you could use 10, but generally in the market, it's about that. It's going to be a little bit lower, probably going to be about 7,500 if you are in United, because we have a little lower price point in Orange County. So you're going to take that GCI and you're going to divide it by the average commission income. And then you're going to take the royalty plus the company dollar cap. So that's the anticipated cost of sale. So that would be, if you're in New City, it would be 28,000 plus the 3,000. So that would be 31,000. It would be your cost of sale for the year. If you're in Middletown, it would be 22.5 or north, 22.5 plus 3,000, and that's 25.5 cost of sale. And then you're going to take your GCI and multiply it times 0.30. And that's going to be your operations expense budget. Does anybody have any questions about how we came up with any of these key? Most of this, because there's such great systems and models in MREA, is it's really, as long as you know how to use the calculator, you can get your numbers. You just have to follow the model and come up with it. So you can see here, you did get, as part of this, how many homes you had to sell in a year. So that's going to be critical when you're doing it. I'm going to give it to you for homework. And if anybody wants to send me theirs and wants me to look at it to make sure they did it the right way, I'm happy to do that. Okay, so let's go to the next slide, Eileen. Yep. So this is actually showing you, they did the calculations here. I didn't realize that this slide was in. This is for someone who wants the net profit goal of 100,000. They divided that by 0.60 and came up with a gross profit goal of 166,666. And then they came up with a gross commission income of 416,000. How many homes would they need to sell? At the average commission they used here was 7,500, would be 56 homes. And the anticipated cost of sale is the royalty and cap, and that the market center they're using as an example is 23,000. And their operating expense budget would be 125,000. Any thoughts, questions?
I just wanted to confirm, for Hudson Valley, it would be 31,000, correct? For the
Yes.
anticipated cost of sale?
Mm-hmm.
Okay.
Yep.
Thank you.
Okay, next one, Eileen, best practices. So the first thing you have to start with is, in order to come up with a net profit goal, you have to have clarity on what your big life is, what you hope to get out of your real estate business. What is that going to fund in your life? Set your personal and business budgets. Set up your LLC. Open up your additional bank account for your taxes and for your operating account as a business. And of course, any other savings that you might want. Download and use the MREA chart of accounts. And again, we have someone in the office, Mike, who can help you with that. We have a customized chart of accounts. We have taken the one out of MREA and we've customized it even a little bit further. So we can help you to get that into your QuickBooks if that's what you decide to use. Purchase tax accounting software, which again, that could be QuickBooks or any other one that you wanted to use. Hire some leverage, right? In order to set up an LLC, you'll probably need to have an attorney do that, and a CPA to do your books and to give you some tax guidance on the business. Set the dates to calculate and pay your estimated taxes. So other than 2020, which is business through
You're gonna have to start all over. That from where you said 2020. So I lost everything.
Same here. You're cutting in and out.
that said my was unstable.
This is live TV, people.
Can you hear me or not?
Now we can.
April 15th, 15th, and January 15th. So January 15th of 2020, we paid through December of 31st of 2019. Again, everything is different this year. They're all different dates. So I think the first quarter tax payment is not due until July 15th. Was due June 15th. It's really funky this year. So prepare for your future insurance savings and investments. And, we are really big on investing in real estate. And as a real estate agent, you have a unique edge in doing that. And you're going to see us have some more classes on wealth building through real estate because it's important and it's probably something that we haven't taught enough in the market centers. Okay, your daily success habits, your ahas to achievement. So tell me a little bit about
What was the question?
We lost you again.
so I know I just cut out.
We didn't get the question.
So today, what we talked about, I'd love to hear your ahas. Was it new information to you in terms?
Keep cutting in and out.
Oh, sorry.
Oh,
Can you hear me now?
yes.
So were today's concepts something new for you, or was it what you expected to hear about how you would be running your business financially in real estate?
Yeah, this is definitely something new to me. Yeah, I talked. We do one-on-one coaching, but we never really went into depth like this. We talk about the business plan. I made one up. But the things that we need to keep your business running, setting up a tax account, all this stuff is new to me.
Okay. So did you find it helpful?
Definitely did. Yes, ma'am.
Okay, good. Good. Do you have any questions about anything that we went over today, or about how to set it up?
No, it's just playing with the numbers, plugging numbers in, and then see how the math works. That will be the main thing.
Yeah, yeah. And your coach, again, can definitely help you with that. I'm going to make sure that the coaches are on this with the business plans and making sure. And, you know, as you go along, again, if you have any questions, you definitely can reach out to me. It's pretty easy. It's Pelatti, Pelatti at kw.com. So I try to answer all my emails. Sometimes it might take me a day or two, right, Eileen? But yeah, and Eileen just put it in the chat box. So you have that. Okay, anybody else with any comments or ahas about what they learned today?
I have a aha.
Yeah,
So,
sure.
I think especially as a new agent, you're so focused on so many other things like lead generation, and you want to work with buyers, and you know you want to list a home, and there's all these things. As a new agent, you get so overwhelmed. But I think this was such an important class because there's another side that I feel like I need to plan more. I need to be responsible for my own money. I love how you said treat real estate as your business. And I think I need to have that as my mindset, because this is something that I would normally not talk about with my coach because I didn't think of it.
Right.
You know, sometimes you're so busy in the moment, and sometimes I feel like this was a really nice layout because I really need to take a step back, plan for my future, and just relook at my finances. So I just want to thank you for going through each step and each page with us.
Okay. All right, good. Well, I'm glad. And yeah, and you know, the coaching is really about accountability. So that's why the Ignite class is so important, is because it really gives you the basics of the training that you need, you know, beyond just what you took in your real estate class, to get the fundamentals of the Millionaire Real Estate Agent book, and the systems and the models, and how to really build that business. And I mean, you know, if there's any advice I can give you, the biggest piece of advice I could tell you is read the MREA book and then reread it, and then reread it, and then reread it. And just keep running your business according to that. It's foolproof. You know, Gary Keller says it's simple, it's not easy. You know, many people fail in the business because they just don't keep doing the lead generation activities that they need to do. You know, and a lot of them, I call some of them lucky A's. Okay, they'll come into the business and they'll have a really big sphere, and they'll have a lot of people that will give them business. And then what happens is they start doing some transactions and they don't have a solid foundation, and they get involved in doing the 80% activities instead of the 20% activities. Okay. And we all know, right? E to P, 20% of what we do will get us 80% of our results. So we want to make sure we stay in our 20%, and agents get out of that. And then what happens is they fail to consistently lead generate, and their business falls off, or their business gets to a certain point and it can't grow anymore because they're one person and they haven't built in any foundation and they haven't built in any leverage. And that is, it stalls out a lot of agents, and I've seen them get discouraged and burnt out in the business because of that. So, you know, we want to try to help everybody to grow their business the right way, to put in the right foundational systems, models, and tools. And the best time to put in the financial part of it is right now, because you don't have any distractions. You don't have an overwhelming amount of business. So you need to get it set up right, so that the financial side of it, you know, always will keep propelling your business forward. Eileen, are there any more slides on here? Okay. Yes, we know this, right? 10 contacts, 10 conversations, 10 notes, and 10 home previews a week. I guess the last one, we're down to 30 because we can't really preview home. Although I would say, hopefully when you talk about planning in your business, that every day you're sitting down and looking at the hot sheets in the morning and in the MLS and seeing what listings are coming on, what listings are going under contract, what listings are closing. Because, you know, if you set up your areas within the MLS, you know, I'm going to be honest with you, I don't do that anymore. But probably for the first 20 years of my career, I did that every single day so that I knew the market in and out. And you'll see the trends from that. You'll see what homes are selling for. You can go in and look at the listings. It's really, that's how you become the real estate expert, is you really know the inventory and you know what's happening in the market. So, you know, take 15, 20 minutes to go through those hot sheets every morning. And of home previews, and it's a lot shorter amount of time. So time block for that planning every day too. Next, Eileen.
Sure, I'm not sure if you can hear me or not, but Mira also had a comment in the chat box.
Yeah.
She said, for her, it was super informative, but the more classes she takes, the more confused she is. She would probably really benefit from one-on-one coaching. Meralda is helping her and she's really great, but she's not sure what she needs to ask her to help her with.
Okay. So, Muriel, let's have, I'm going to have an offline conversation with you and see if we can get you a prescription to get you online, to for what you need to be doing. It's probably pretty simple. I'll give you a call, ring. I can't do it after this, but either later today or tomorrow, I will call you. Okay, scripts. Is everybody practicing their scripts? Scripts are so important. Okay. I know it's uncomfortable, but you have to get comfortable with being uncomfortable in order to grow. Okay. Okay, compliance. Okay, we know about do not call. We know we can't call anyways right now, until September 7th. No cold calling, no telemarketing in New York State. And so we always want to be cognizant about that. And calling with scripts. Next, Eileen.
You're frozen again.
Any other ahas or
It's cutting in and out.
other ahas or questions?
There she is.
Did you get that? Ooh, really bad today.
Anybody else have questions or comments for Rosemarie? She can answer you. Well, maybe she can't answer you. She could type it in. No? Do you want to wrap it up then?
Thank
All
you.
right. Cricket.
Thanks a lot, guys.
All right, take care. Thanks for joining us today.
Thank you.
Bye-bye, guys.